And welcome. Good morning. Happy August, everybody. We are just, as it is Monday, new month and a new week. We have a new back in the grind. I think it's kind of important during earnings season and what's going on for the month to try to get up and going with some thoughts and go through what's hot, what's not, some potential looking at seasonal trends. Do note that the asterisk denotes the middle of the month for these when they begin a strong time period. Crude oil's seasonally strong, but not right now. And what's going on there is more of a counter-seasonal event, a cyclical downtrend, a commodity deflationary pressure, so to speak. So not all years do seasonality kick into high gear. One of the concepts that we've been looking from a technical perspective is watching for crude oil to break, maybe testing the 45 area. And in writing this even last night, I even say oil prices look like they're only to test the 42.5, 45 level, just based on the weekly charts. This is what we've been talking about over the last few weeks anyway, so no major surprise. So we do have still GLD, weekly bullish last conditional change, and a daily way the heck off the grid there. And looking for bullish stocks, XLU, GGP, and MAC, and I'll go over those three. One is the XLU being the ETF. Bearish stock, Apple, one that we've been watching, Tractor Supply, and Celgene. I want to go through why those are bearish. Seasonal commodity spreads. We look to buy gold, sell silver on or about 8.5 and hold through 10.15. Now that's just a seasonal commodity spread, and every time I've written down a seasonal commodity spread, they have on a 25-year historic basis, they have over an 80% success rate, which does not mean they win every year. It's just that we should be watching this relationship, and for commodity traders, you can also, or looking at spreading rather than outrights. We should see gold outperform relative to silver. Check with your commodity brokers if you wish to take that trade and what the margin requirements are and what the correct ratios are. Jan heating oil. We look to buy heating oil and you sell reformulated blend gasoline. It's the January contract, so that would be January 2016 on or about 8.7. You hold through 9.12. Buy Dees meal, sell Dees oil on or about 8.7, hold until about October 13th. Last week, you can go to your Documents tab, and I highlighted that for everyone to see at the bottom right. You can go in. Last week we identified we had a weekly low close doji in soybeans, and soybean prices kind of moved up a little bit near their weekly moving averages, and we'll go through that one more time. But it's certainly respecting that low close doji. In fact, it started off on Monday straight down to hell in a handbasket. It rallied slightly back Tuesday, Wednesday, Thursday, almost getting back near the weekly opening range, and then tonight or last night or now we're trading back down in the soybean futures, which currently are down a dime at $9.30. So in essence, this week, what's going on? I would have to say the most poignant, most important number that we are going to have is going to be, of course, unemployment report. The Fed's looking for that. The inflationary figures, they're looking for expansion or contraction in economic growth. So construction spending this morning might give us some idea. Construction spending, whether it's new homes, whether it's buildings, multi-unit. Last summer we saw a lot of apartment buildings being built, rather relative to condos and new homes. Existing home sales will be important. I put in, since we are a connected economy on a global scale, Euro retail sales. The Eurozone retail sales comes out Wednesday morning. That might be important to kind of follow. Employment cost index is on Tuesday. And next to those big bank reports, Bank of Japan and the Bank of England come out on Thursday, but I'm not really expecting that to be a monumental market mover whatsoever. Weekly jobs, I think we can throw that out the window for right now until we get back into a heightened state of jobs growth or a heightened state of jobs decline, a reversal. You know, right now it's kind of like even keel. So looking at the weekly jobs numbers, it's not have had an effect as it once did. This week, as like the last few weeks, we have an enormous amount of what can be some explosive corporate earnings reports, big names. We have some retailers like Coach. We have Coors, the competitor to Coach, kind of. We have Disney, a big Dow component there, near a high that we were kind of interested in tracking. MGM, where it is this weekend, MGM was off the hook busy, A pharmaceutical biotech company rented out all of MGM apparently, and also Aerosmith played at MGM Grand. When I said rented it out, they rented out the skylofts, the mansions. Those are, I mean, just off the hook busy at MGM Grand. So I'm not sure how that's going to play, but entertainment now, hotel and entertainment is approximately 60%, I think it is, over 60% of revenues versus it used to be gaming. It's kind of flipped. So we'll be watching to see what MGM has to say on Tuesday. Wednesday, I mean, not that I want to downplay the rest of the earnings. Archer Daniels Midland, we have Caesars Entertainment, not really big thing there, but First Solar, remember we have also in here, I have to find it, I believe Triple D comes out, and 3D imaging, and remember we had Stratasys, SYS as a symbol, I believe, come out. Triple D's on Thursday, there it is. Report dismal earnings. So I'm not expecting, there could be some big changes. We have some energy companies, Apache. You have dry ships. Haven't heard about that in a while. Groupon, Jack in the Box, Jamba, which I don't know if that's a big thing anymore, but Jamba Juice, you know, we'll see if people are into health food or not. Apparently they're not into as much health food as Whole Foods would have liked, and apparently they needed to jack their customers up and on poor pricing. Marathon Oil, Coors, there's the competitor to Coach coming out. Monster Beverages, NVIDIA, Rubicon, I mean Satellite Dish Networks, Molson Coors, which is TAP, Hershey's on Friday, Sotheby's. So there's something literally, CBC, Cablevision, there's something literally here all week, every single day, on almost all component sectors of the market, from energy to retail. Even Zillow is coming out. We'll find out on Tuesday how they report. The insurers, the KIE, has been on a tear. We've seen a lot of abnormal seasonal strength in the insurers. And if we take a look at all the insurers, from Chubb all the way down the line, CB is Chubb's symbol. Really explosive growth over the last month. Meanwhile, we take a look at in my weekly observations and monthly observations. Last week we were on the verge of creating monthly sell signals across the board. Only the Russell generated a monthly sell signal. We still had this cycle high that was due in the third week of July, and it had strong merits. We saw almost a 5% correction from peak to trough. It doesn't mean the correction's over. It just means that perhaps this market, with the looking at, as I'm sharing with you, these are monthly charts up top. I just want to kind of focus in on the advanced decline analysis on the monthly charts. So if we take a look at the AD line on the Dow, you'll see on a monthly chart, I mean, we really haven't done anything all year. It's sideways to down. Same on the NYSE, we started to deteriorate. We're still above a longer-term moving average, as I'm pointing out here. Looking at the Russell, this is the one that's deteriorated the most, an actual downturn and a crossover below the moving average. Looking at the NASDAQ or the Qs, the NASDAQ 100, which is kind of a, what's the word I'm looking for, unusual divergence here. And I can zoom this up here, and you can see the fact that while it is pointing up over the last month, it did uptick. We have had a significant stronger rally high, and we still have a bit of bearish divergence forming, as well as the lack of volume behind the market on a month-to-month basis in the NASDAQ. Then when we take a look at the S&P 500, and let me get this into focus again. It's kind of a different scenario, and that's the way it's been playing. The volume is going up and the accumulation's going down, and the S&P's posted almost one of the top strongest closes on the monthly basis. So what it really suggests is more of a trading range. I also wanted to point out that that doesn't mean the tech sector is typically weak this month. And the funny thing is that the pricing structure looks good. We need to be on guard. Two sectors, that the XCI and the IBB, computer hardware as well as biotech. We need to be watching that for signs of complete weakness or deterioration if it happens by mid-month. And that will impact the valuation of the Qs. The main culprit that used to really impact the Qs, or the main leader, was Apple. And Apple, as we'll go over in just a few minutes, did generate some significant weakness and had a, in the last few weeks, has not been participating in the overall equity market rally, number one. Number two, Apple's been kind of showing some weakness. Apple also formed a monthly low closed doji and a monthly PPS sell signal. So that doesn't bode extremely well. We have a kind of a weekly double top, and I'll get through that in just a minute. And that's why I have here bearish stocks, Apple on the list. Very strange to have Apple on a bearish outlook, but I will give that technical reasonality in just a minute, and we'll show that here in just a second. But in any event, what I would like to say is that this earnings season has been one massive binary trading event. I mean, we really have had to guess if a stock is going to go up or down, and by the amount, either 5 or 20%. They've really put in a lot of premium on deep out of the money options. It's made it kind of been a challenging earnings season, I will have to say. Our indicators have been mixed. We've either had a bullish daily outlook and a bearish weekly, or vice versa, but we've not really been in sync. So that's more indicative of a market turmoil and a market that's unsure of which way it wants to go. It wants to go up. People want to buy because there's no place else supposedly to put their money. But the other side of the coin is the market in a lot of equities overvalued relative to their potential earnings growth for the next 3 to 6 quarters? That's the key. Are some of these stocks overvalued relative to what their peg or earnings growth rate will be? Oh, and if we do see further gains in the economy or a contraction in the economy, is China's weakness going to spill over to the United States? We don't know that. So that's what I think. That then combined with, you know, whether the Fed's going to raise rates, by when and by how much, that really does have this market on a day-to-day, week-to-week trading outlook, and that seems to be what we are doing here. On a side note, we have 200, almost 50-50 of the stocks near their 50-day, above and below their 50-day moving averages. That's kind of indicative of a neutral market, a trading range environment, and that's in the S&P 500. Looking at the McClellan oscillator, that's a different indicator which reflects the advanced decline, a moving average of the advances versus decliners on the NYSE. The weekly reading is still underneath the zero line at -92, but now the daily reading is back up to 57. This suggests the market is still range bound, but with a bearish bias on an intermediate term basis. So if the market seems to rally over the next couple days and the McClellan oscillator gets up maybe into the 150, 170 range, it may suggest a selling opportunity. So we'll be watching that in our trading room over the next couple days. All right. So this is your sheet for you guys. Let me go over now and explain why did I put Apple, something that we've been focusing in on in the trading room and looking for a daily close underneath, and we'll get right into that. So we were talking about if the market generated a close below this opening range, because that was the day the market opened lower in it all week, and we had this almost textbook resistance right where it got back up to. And it just, as the stock market generated newer highs, it just paused a bunch of dojis. And then Friday, of course, we did close underneath the low of that opening range. Now we are at quarterly support, which we could blow through. Monthly support for the month of August is generating blue below gold. So the monthly outlook using Person's pivots is giving us a bearish outlook. And in addition, we've seen a deterioration on volume on a short term, a deterioration of volume on a longer term, and a deterioration on even a much longer term basis. So looking at Apple on a monthly chart pattern, clearly we now can see what I was referring to. This is the doji, this closed below the doji, and now we have a sell signal generated below the last, not 1, 2, 3, 4, and I bet you if we average out these lows, we've just closed below and now have formed a kind of a bearish pattern. I think people will be interested in that. If the market is going to behave bullishly, then it needs to reject that sell signal almost immediately, and by the end of this month, move back up into and close back above these highs, forming an equal and greater pattern, or equal and opposite at the very least. I think that the market, if it gives anyone a chance to get back into the 124, 125 handle, Apple will give then a at least the monthly pivot. That will reduce and look for a move, a pop back up to monthly pivot near 124.5, and then we can start to look at a defined risk strategy stating that if the market then goes back above the high, we get out of the trade. So I would look for Apple to get back up near the 125 handle, for looking for selling opportunities, get back near these monthly moving averages, and go with the newfound trend direction of the generated PPS sell signal. So that's the complete analysis and why I have Apple on a bearish outlook. As you can see, we have a sell signal. Now, let's look at TSCO, Tractor Supply Company. What happened there? Why am I giving this a bearish outlook? Well, from a seasonal perspective, we tend to go down. The volume analysis was, while the longer term looks actually stellar, to be honest with you, these long shadows on a monthly chart aren't initiating a lot of, for me, bullish confidence. Looking at the market as a whole on an intermediate term basis, Tractor Supply does enter in the month of August a seasonally weak period of time, and we formed a weekly low close doji. So Tractor Supply, and I would suggest that looking at the market, bearish for the next week or so, down to monthly support, maybe 87, testing into this this region right in here, 87.91. Next on my list, and I'm trying to get the list back up. Celgene. It's like blasphemy. It's a counter-seasonal trade, but it does have a little bit of weakness going into about the middle of the month, but we did form a weekly low-close doji. When I take a look at Celgene on a longer-term basis, we did see kind of a situation that I look for, whereas we got a significant newer high in this market, formed by a doji on a weekly basis, and we've had a significant move since 2014, but we haven't seen improvement in the volumes. Now, I've been saying that for quite some time. The market's been maybe moving on air, and perhaps this is partly due to a split that occurred. But needless to say, up at this level, a stock that typically forms a low close doji, we also would be taking a look at not just the volume, which shows divergence, but the stochastics indicator, which also shows bearish divergence up here. So this is a stock that I think that in the sector IBB, the biotech sector, while it did rally, it formed this kind of dark cloud cover pattern. Even the sector ETF itself has a very similar pattern in the fact that the stochastics has formed that bearish divergence, something that may not happen in the next week or two, but longer term over the next, say, 2 months, we really need to be watching for a continued potential breakdown in the biotech sector, as it has been one whale of a move over the last 2 years. In fact, year to date, it's still the IBB year to date up about, I think, 26%. I think we've given the IBB a relative technical workover enough, but I'll just give a quick review. If we get underneath this shelf of support that's been built in since May 29th, that last generated buy signal was on May 22nd. A close underneath that level, and this, more importantly, as you can see, these gold lines here, at the very least, if we need to see a weekly close underneath that level, and I think it'd be safe to say we could see a more meaningful turnaround in the market. But this is a warning sign, and I think as we start to see other names in this sector like Biogen, which surprised the world, all of a sudden everything was looking good. By the way, it wasn't looking that good. The volume, and this is one of the warning signs, and this is what I'm saying, as the market rallies, I don't know what day of what week it's going to collapse, but eventually without volume behind the move, right, you're going to see a downside move. That's only a 36, 37% decline in that short period of time. So, if you bought into here, all your profits are gone. If you bought in here, you're in a major loser. If you bought at the high, that's a problem. But needless to say, I think that this is what the sector is capable of, or at the very least why I pay attention to markets that make significant higher highs with no volume behind them, are susceptible for, getting the rug pulled out from under them. So we still need to focus on, some of these names in that sector. The best looking sector on the board over the last week or so, believe it or not, one of a trade that we took several weeks ago was long bonds. And we identified the bond market could rally. Now, bonds pricing moves more times than not in association with utility prices. They kind of move hand in hand. Why? Utilities issue bonds. I mean, so I guess they're interest rate sensitive for that reason. The utility sector had the XLU. Obviously, we've beaten this analysis to death. Lower lows on higher volume, which suggests bullish turnaround, and it has gotten a bullish turnaround. I think we do have a slew of reports coming out this week, and the market just opened here. I would suggest we got a couple things that we could look at on the XLU. I'd like to see a pullback in the market if no one's in it already. At PA Stock Alerts, our sister publication, many of you know we do have a small position in XLU as a disclosure, along with another utility stock. And I think just to share with you guys what the market's really doing here, you know, this is a potential inverted head and shoulders bottom, and boy, let's face it, this is a whale of a neckline in here, right? Shoulder, head, shoulder. This is kind of like the more accurate neckline on an ascending move, right? Some people would suggest maybe that's the shoulder, this is the head, more complex. Either way you want to do it. It suggests on a breakout of this juncture or this swing high here, it suggests a more significant upside move, and probably, you know, 45 to 46 range in the XLU over time. A lot of people are also, as we wrap this up, folks, are talking about the dollar and the dollar's move. You know, this is a daily chart. Let me change it to a weekly chart. As you can see, the dollar index. The dollar is right now, and last week and the week before, we're just really, you know, sitting. If the dollar is actually stronger, I don't know what the definition of stronger relative to what, 2014, or stronger relative to the high in March. But I would say since March, while the dollar valuation is actually lower, the chart pattern suggests we could get a potential breakout, and maybe that's a cause for worry or concern for people. And the markets like gold and crude oil, which are dollar denominated, are getting ahead of themselves. So crude oil, I don't think, is a function of the strong dollar, because, I mean, relative to the dollar, it's weaker than in March. And crude oil prices relative to where they were in March, they're, you know, a little weaker. And gold's absolutely weaker. So I don't think there's a connection between the dollar being less than it was in March and people claiming dollar weakness. I think it's more apprehension and seasonality, supply and demand functions with what's going on in the crude oil market. Gold, which is a seasonally strong period of time, is not responding, which means gold, if it's in a seasonally strong period of time and it's not rallying, I can't wait to see what happens in a seasonally weak period of time. So we'll change that somehow. That's a strange. Everything's a doji in here. Here we go. All right. So basically, you know, gold, it really has been it's been a non-event. It's been in a very tight range. The only thing that really has happened in here, and here's a tight range. It's not just tight between the ranges, but the open-close relationships, and it's really a non-trending event. The only thing I could suggest that is kind of trending is that the volume is kind of picking up a bit, and it's really going to need to see a close over this 1109, and then we have this weekly, let's get this over here, this weekly last conditional change. If this thing's going to break out, last week we formed kind of a doji pattern, so we got to watch for potential high close dojis in the next 2 to 3 weeks, or definitely a confirmed breakout above the 1138. You get a confirmed breakout 1138, you know, it's going to be one of these all or none type moves where the market just breaks out and goes. So you want to be watching on a day-to-day basis. You want to watch for breakouts back above at least the 1105, 1106 on a daily closing basis. So that, to me, when I look at gold, it's a hedge that has been prevalent in our society and our culture for decades as a hedge against inflation, where we're in a disinflationary environment. And some argue gold's also good in a deflation environment. Gold's also a hedge as a shelter against economic turmoil and geopolitical issues. And after Ukraine, one would figure, boy, there was a geopolitical issue. We would have wanted to see gold pop. And also gold's on jewelry demand, on strong economic conditions on a global scale, from India, Mexico, Latin America, China now, and so as a status symbol. So we really aren't seeing that demand pick in. What makes gold seasonally strong this time of year is the jeweler manufacturers start to buy gold in preparation for jewelry manufacturing for the holiday season. So this is when you get kind of that bid coming in the market, and then you got the Indian wedding season and et cetera, et cetera. And that's why we tend to see gold move up a little bit, not on investment demand, but on retail sales demand from wholesalers preparing for jewelry manufacturing. So anyway, that's the weekly wrap-up, the monthly wrap-up. I wanted to go through and define to you what these bearish stock outlooks were, of course, the bullish stock outlooks. And with that said, I hope everyone has a great trading week. We'll look forward to tweeting out if there's, for those that are signed up on Person's Planet tweets, if we see something that's exciting, some new changes that are occurring, and we'll get that information out to you. Disney, by the way, at 121, up a buck, and Disney up here, we have a quarterly pivot resistance at 122.25. As soon as this refreshes, we'll get that up for you. Another stock that is earnings this week is Green Mountain Coffee Roasters. I know, I had to throw it in there. We've been going through Green Mountain Coffee Roasters as Goldman Sachs even threw the kitchen sinks out a week ago saying it's undervalued. It's like, really? Stock goes from almost 160 to 69 and it's undervalued? So we're enough of those K-cups or the machines, and if they've worked through their recalls, I guess is the word I'm looking for. In any event, Green Mountain Coffee Roasters, by the way, folks, did generate a weekly buy signal, PPS buy signal last week, an engulfing pattern. It also generated a double bottom on a daily chart. We'll share that with you in just a minute. Try to get it up for you here real quick. But I think here we are with crude oil trading in the 45 handle. And a lot of things going on. That is going to probably weigh in on what? XOP, XLE, and XLE is down 1%. Material sector's down. USO's down about 2% today. And China, which was down more, I think it's come off its lows in the overnight, but the FXI is at 39.95. It's been floating. The FXI hasn't quite taken out its extreme low that it made, by the way, 4 weeks ago. So because China's down, I think the whole commodity story, copper, et cetera, is weighing in on the market. But here is crude oil. And on a 15-minute chart, obviously we had done some analysis and talked about that black line being the area of support resistance if it breaks it, and then it came back and tested it, and there it is. So let me go over and share with you Green Mountain Coffee Roasters, real quick. So here's your kind of daily double bottom formation, and on a weekly chart, we had on Genesis, it's going to generate a buy signal this week. On TradeStation, it generated a buy signal last week. Either way you look at it, Genesis still flashes a weekly high close doji on Green Mountain Coffee Roasters, but keep in mind, earnings are this week. Therefore, it's kind of with an equity market that's got a quarterly outlook that's very bearish, a monthly which held. I must point out to you, the monthly pivots last month did hold. Green Mountain Coffee Roasters, from a seasonal perspective, could see a bounce in September. It's August, give or take. You know, it's a tough call on this one, whether or not they're going to provide a decent profit or lose less. I'm not sure. I think the last reporting quarter was 80 or 85 cents. I have to double check my notes on that one. But needless as it is, that concludes this week's planning and scanning. And I hope you had found some value in the outlook, the seasonality, as well as the bullish and bearish stock setups. Thank you, everyone. And we'll be now with our regular scheduled trading room.